Epfo, Employees Provident Fund Organization. This is the organization maintains the provident fund balances of employees mobilized through employees contribution as well as entrepreneurs contribution as well as employers contribution. So there is a proposal to enhance the present limit of investing 15% to 20% in incremental funds in the equity capital market. So until now, the organization is following to invest 15% of its funds received additionally during the year towards the investment in equity market that was allowed by the management trustee of the Epfo. And one more proposal was there for the current year to enhance it from 15% to 20% of the incremental receipts in PF organization to invest in equity market. The Central Board of Trustees states that volatile market conditions while agreeing to in principle to 20% limit. For this reason, the Central Board of Trustees has decided to defer the hike in investment of PF funds in equity market. Also, the Central Board of Trustees of the Employees Provident Fund Organization deferred a decision on increasing the equity investment limit from 15% to 20% because of volatile market situation in equity capital market. Because of high fluctuations in the equity market, the Central Board of Trustees of Epfo had decided to defer enhancement of investment limit from 15% to 20% of the funds received during the year. Also, the board has agreed in principle to the idea of higher equity allocation to improve returns, but will discuss the issue further after September. So, Central Board of Trustees of Epfo is cautious enough, showing cautious to invest in the equity market, to allowing the Epfo to invest in the equity market. The investment in equity market of the funds of Epfo is the intention to earn higher income, but because of risk involved in the equity market and volatile situation in the equity market situation prevailing in now, the board has decided to defer the enhancement of that investment link cap limit. Also, the Central Board of Trustees approved face authentication technology for digital life certificates and cleared a new central payment system for pensioners and proposed a detailed legal framework to minimize litigation. There were some cases of litigation because of face identification and other system related issues. The Central Board of Trustees of Epfo has approved face authentication technology for pensioners to reduce litigation. Face authentication technology will allow pensioners to avail benefits from home. With the face identification technology, the pensioners can make the pensioners to avail the benefits by sitting from their home. They need not go to PF office to avail the benefits. The board also discussed ways to allow self-employed and unorganized people to enroll with the Epfo. Not only the government employees or organized sector employees, the Epfo board is also considering to allow self-employed and unorganized people also to enroll as members of Epfo and contribute for their pension funds. Of course, Central Board of Trustees of Epfo has felt that this is not the right time to tweak the equity exposure as the market is still susceptible global shocks. The Epfo organization is currently allowed to invest up to 15% of incremental inflow in the city in equity. Its Finance and Audit Investment Committee had approved the proposal to revise the limit to 20%, reasoning that higher exposure of stocks may yield better returns. Of course, higher returns may be with higher risk. Risk is always dangerous because the funds are to be protected because out of risk. EPFO may be allowed to invest in debt funds but not in volatile, risky equity market to protect the investments, to protect the pensioners' funds. Let it be any rate of interest, then the EPFO should not be allowed to invest in volatile equity market, which is always risky. High risk, high reward. Also, there is a possibility of huge loss also. That should be avoided because the pensioner funds are to be protected and also streamlined and invested where the income is assured. Let it be small or big, but not into the sector where there is risk is involved of loss of investment or loss of income also. The EPFO has announced a 8.1% interest for the year 2021-22. This is the lowest since 1977-78 when it was 8% rate of interest. For the year 1920, the EPFO has credited 8.5% interest, which is one of the highest rate of interest for the financial year 2021. The trade unions have been opposing any investment idea in stock markets by the EPFO as these are not backed by government guarantees. All these, I stated earlier, all these provident fund contribution has to be protected and repaid to the pensioners with interest. So such funds should not be invested in risky equity market, but better to invest in debt funds, debt market rather than equity funds. Also, the investment in equity funds is not guaranteed by the government. Hence, that is also not advised. That is also one of the reasons to prevent EPFO to invest in equity market or to enhance the cap limit from 15% to 20% of incremental pension fund receipts. The trade unions also cited the slump soon after the pandemic took hold when the return from the equity was negative 8.29%. So, because of pandemic situation, the loss in there was no profits in equity market, but there was also loss to the extent of 8.29%. Because of that reason, the trade unions also opposing to invest in risky equity market. Now, pensioners will not be required to go anywhere for EPFO pension. They can carry on the benefits, they can collect money by sitting from at their home. This EPFO organization is working on expanding the convergence of the Employees State Insurance Corporation, that is ESIC, scheme with Ayushman Bharat scheme to bring the unorganized sector into the social security net and provide cashless medical facility across the country. So this EPF organization is also expanding its network by joining hands with Ayushman Bharat scheme, Employees State Insurance Corporation, to cover not only the organized sector but also unorganized sector, to provide all employees to all members social security net and provide cashless medical facility all over the country.